Right now, crypto assets in total, all digital assets, are a $4 trillion market. Global real estate, 400 trillion. Global debt, 300 trillion. Global equities, 100 trillion, etc., etc. Gold, 20 trillion. Now, Bitcoin probably replaces gold. Okay, so we know where Bitcoin's going. But the rest of it is going to account for the other part of this equation. And that comes from this total market cap of the entire space. If we just use the same log adoption channel, which works in everything, and we've shown it, it tells you we get to 100 trillion in value by somewhere like 2032, if we just follow the fair value curve. So by 2032, 7 years from now, this entire space is 100 trillion.
Raoul describes the current crypto cycle as the beginning of the greatest macro trade in history. With the market now valued at around $4 trillion, it remains tiny compared to real estate or global debt. Yet, Powell believes this small base sets the stage for exponential growth as blockchain adoption accelerates worldwide. He predicts the total crypto market could reach $100 trillion by 2032, fueled by rapid innovation, rising institutional involvement, and expanding real-world use cases. Bitcoin, he says, will likely replace gold as a core reserve asset, while Ethereum and other smart contract platforms will power the financial layer of the digital economy. For Powell, crypto isn't just another asset class, it's a revolution in motion. Despite volatility, he sees a long-term trajectory that's impossible to ignore, driven by network adoption moving twice as fast as the internet itself.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So when you want to unlock your future, you start to think about, okay, I've got crypto and NASDAQ. And I know a lot of you right now are all trading tech stocks because Bitcoin's been in this kind of sideways chop period. So you're all piling into tech stocks. Julian and I have tons of them in the portfolio. We love the technology trend. It's a really easy trade, has been an easy trade. But if you're honest with yourself, if you were to own one or the other, then you find that the NASDAQ has underperformed Bitcoin by 99.94%. What is the point of owning any other asset? This is the supermassive black hole of assets, which is why we personally are all in on crypto, because this is the big one. This is the greatest macro trade of all time. This is why many of the greatest macro investors of all time have moved across to crypto, because it is such a powerful trend with such powerful returns, and the cyclicality makes it also tradable. It's also the most powerful, the greatest macro trade of all time, because it's driven by network adoption. Remember, Metcalfe's law is driven by the number of users and the total value transacted on a network. Go back to Amazon, a perfect network adoption model. Metcalfe's law drives Amazon. People don't understand the valuations of Amazon back in the early days. You see, what happens is they had a number of users and they were only buying books. So the total value of transactions was low, but there was a lot of users. They started adding new products in. The value transacted on that network exploded. As they did that, the number of people using it exploded. That is what drives these incredible log charts of all the technology stocks. It also works in crypto. By the way, sorry, I forgot to mention before, we talked about this debasement versus earnings. That is why you see all these people, old school analysts, screaming about PE ratios. PE ratios are back to where they were in 2000s. Everything's going to crash. You don't understand. Earnings go with GDP growth and price goes with debasement. P ratio always goes up in periods of debasement. That is how the world works.
Which is why valuations look expensive today, because prices are rising with debasement. Earnings are still subdued because the business cycle is subdued. So basically, all that needs to happen between now and next year is earnings need to rise to justify the valuation premium, which is already baked into equities.
But PEs will still go up.
Correct.
There's different valuation. PEs will go up, but it won't go up as fast. But it's been driven by this debasement trend. So, okay, let's go back to this chart. This chart is a killer chart, and everybody mid-curves this. This is total internet users in millions from 1992, when there was first 5 million users of the internet, and crypto users 2016, when there were 5 million. Now, we use active wallets as a proxy versus active IP addresses. Are they perfect? No. We all have lots of wallets. We all have lots of IP addresses. It is the direction and the rate of change that matters. The internet grew at 76% a year and then started flattening down to about 43% a year. That's very typical of network adoption models. Crypto has been growing at twice the speed of the internet. We will have 1 billion active wallets, and we can proxy that for active users. Yes, there's less active users. I get it. Doesn't matter. Don't get caught on mid-curving it. What it's saying is it's growing twice the speed of the internet. This is the fastest growing technology in all human history up until AI, which is dwarfing it already. But the difference between AI and crypto is you can't own crypto. You can't own AI very easily, and you couldn't own the internet. But here, you're getting a token in the infrastructure layer of the entire new internet, which is blockchain. And blockchain is not just about Bitcoin. It's not just about Ethereum. It's about all of the use cases of these various chains. We've seen the same with cloud compute, and that's split amongst tons of companies. Yes, there'll be some giants. There'll be some fast adoption. There'll be new use cases. It's all coming. And don't forget, here we're still in the speculation plus stablecoin phase. We haven't started really putting real world assets on chain. That's coming. We haven't even started putting Web 2 into Web 3. That's coming. That's a mega trend. That'll suck in the next rise, which is by 2030, we think we get to half the world's population having crypto wallets. Again, don't get stuck on the metric. What we're saying is the growth continues massively, and it will continue to massively outpace the internet. It's basically the future of the internet with different rails. It's the read, write, own rails of Web3 that will become increasingly important for things like digital identity, how AI agents interact, how the financial system operates, how the system of money operates, how collateral operates. It's all this. So this is the mega trend. This is why we're trading it. This is why it's outperforming everything. Okay, so we go back to this thesis at Xpan that we have that right now, crypto assets in total, all digital assets, are a $4 trillion market. Global real estate, 400 trillion. Global debt, 300 trillion. Global equities, 100 trillion, et cetera, et cetera. Gold, 20 trillion. Now, Bitcoin probably replaces gold. Okay, so we know where Bitcoin's going. But the rest of it is going to account for the other part of this equation. And that comes from this total market cap of the entire space. If we just use the same log adoption channel, which works in everything, and we've shown it, it tells you we get to 100 trillion in value by somewhere like 2032, if we just follow the fair value curve. So by 2032, 7 years from now, this entire space is $100 trillion. If we go above that one standard deviation, it gets there faster, or it gets to a higher valuation by 2032. So that is an astonishing opportunity, considering we're only 4% of the way there. That's how you need to think about this. Then you need to think what is the structure of the crypto market going to look like? Well, Bitcoin will be the sort of percentage, let's say, that gold is of total assets. Well, total assets here is, somewhere close to, I don't know, if I'm looking at it, 500, 800, call it $900 trillion, and gold is 20 trillion. So Bitcoin will be somewhat similar of the new system. So what we're seeing is the game is yet to be played in much of the component parts of this. That's including the applications layer as well. Who's building what on this? This is what's making it such an incredible.
Raoul Pal concludes that crypto isn't just another asset class, it's a historic wealth revolution in motion. With Bitcoin emerging as digital gold and Ethereum leading the new financial system, he believes the entire crypto space could grow from $4 trillion to $100 trillion by 2032. This shift, powered by adoption and innovation, marks what he calls the greatest macro trade of all time. As crypto continues to outpace traditional markets, Pal urges investors to see beyond short-term noise and focus on the massive long-term opportunity ahead. Do you think crypto will truly reach a $100 trillion market by 2032? And will Bitcoin maintain its lead, or will another project take the spotlight?